Wyckoff review of 2022. This is Power Charting. I'm your host, Bruce Fraser. We have reached the end of the year. This is the last Power Charting broadcast of this year. And I want to thank you very much for joining me this year. We have a wonderful Wyckoff community, and I'm here to tell you that you have done a great job navigating 2022, which has been a most tricky year for financial markets. This is going to be a review. As we start the new year, we will look ahead at 2023. Here, this is going to be pretty much looking back. We can learn a lot by going back and studying what we've done in the past, studying the analysis. We have good records. I've thrown a lot at you this last year. We're not going to be able to get close to covering, all of the key things that happened, but we can make a dent. We're going to do that today. First, an announcement. Best of Wyckoff Conference. This is an amazing thing. We have done a number of these. The first one we did was with Dr. Hank Pruden, and it is a tradition. International Federation of Technical Analysts is hosting this. It's absolutely free. And it's going to be on December 15th at 9 a.m. Eastern Time. Go to ifta.org to sign up. Just a simple registration where there's going to be live trading through the session, a number of great presentations, a current analysis of the markets. It's going to be a blast. You've got to be there. Okay. This was our opening slide for the beginning of 2022, January 6th. Now, this is going to encompass a number of different chart studies over really much of the year, much of it in the early part of the year, because that's where a lot of was happening. This is the classic Wyckoff accumulation markup distribution markdown. I just show you this as a reminder that this is the metaphor or framework that we use for our analysis. Cause forms for markup, cause forms for markdown. The markups and the markdowns are where the returns are typically made, but the analysis of the accumulations and distributions, vertical charts, point figure charts, very important. You're going to see many examples of that today. Here is a beautiful schematic of these concepts at work. Upward stride. This is something Ramon did years ago. It's a little fuzzy, but it is a classic. And so here is this beautiful distribution structure that we're going to talk about at length today, because distribution was the story in 2022. And here are the two schematics. You can go read about these in this blog post. This is schematic number 1, number 2. There are many variations on distribution, and these are just two examples. Remember, we don't look for patterns. We look for behavioral characteristics in price and volume. That is something very unique and different about Wyckoff over other methods. So here is a first example, Wyckoff distribution schematics. Here they are. And here are the two distributions that formed at the end of 2021 that we will be talking a lot about here. The Nasdaq 100 on the left, the S&P 500 on the right. Note how beautifully they do in fact follow these distribution schematics. And we see with these arrows, in fact, if you look at this LPSY, we did in fact get a second LPSY, which we wondered if we would at the time. This chart was made in February 25th of 2022, and distribution was complete. Markdown was beginning, and we were showing the completion of the structures here and here. You're going to see more about that as we go along in the next few minutes. I'm going to go through these slides very quickly because there are so darn many of them. You can stop the recording and study the slides at your leisure. Here is a very important relative strength study using, in this case, NOBL, which is an ETF of blue chip value stocks that pay dividends, in contrast to growth stocks. In this case, it's the Dow Jones Internet Index, FDN. And we do this relative strength analysis because the direction of relative strength tells us an awful lot about where strength and weakness is, dominant performance and lagging performance. We have been saying really since 2020, 2021, we've been doing these studies where we have said that growth was the dominant theme, but we were starting to see accumulation forming in the relative strength characteristics. See it here. And so here is what appears to be completed accumulation in relative strength, which would argue for the start of dominant outperformance by more traditional blue chip, industrial, classic value names that have been largely underperforming, have developed really deep value because they have underperformed so much against the growth stocks. Here is a point and figure chart. We will do this analysis at a later time. I'll put this on my to-do list. Here's another look at this. This is, in fact, this chart was done in 2022, January, but it is of the 2020 period, 1996-2001, the end of the dot-com boom. And this occurred right here in 2000. An accumulation structure built in, this is comparing Dow Industrials to Nasdaq 100. These are the growth stocks of that era, the dot-coms, versus the value stocks, blue chip stocks of the Dow Industrials at that time. And after the accumulation was completed, big markup, tremendous multi-year outperformance by the blue chip names after tremendous multi-year outperformance by the growth stocks for years and years. And there is an example of the cyclicality we just talked about at the beginning of the program. So now, where are we today? This is 2000. Well, here is the look at today. So this is actually up to date through December 5th of this year. And so we actually did this chart a long time ago, but I brought it up to date because I wanted you to see the accumulation. Look at this. Look at the beautiful Wyckoffian characteristics. Sign of strength, advance, pull back into an LPS. And now, since the time that we did this, mid-year was this LPS, beautiful jump up and out. This is rotation. This is the rotation we've been talking about. We can identify that. We can trade that rotation. We are doing it in our trend analysis that we spend a lot of time on in power charting over the last month or two. And so stick with us on this. We are developing scans, more technique for being able to see, identify the outperformance characteristics of rotation, which is really, I believe, the name of the game. So very cool stuff. Another chart here that I think is quite interesting is this is the three IPO booms. This is the 1980s. This is the dot-com peak of 2000. And this is 2020, actually, in the Nasdaq comp in this case. But each one of these was an IPO boom. IPO booms tend to stop the advance in the growth stocks. IPO booms come at the end of a growth stock surge. So here, 8 years down after this IPO boom, 9 years down after this IPO boom, this is relative strength. And then here we were saying somewhere out here we're going to get some kind of a peak. We said this could go on for a while at the time that we did this. This was October of 2020. And so here is the throw over of this uptrending channel. And what happened next? Well, let's take a look. It did in fact go up for nearly a year, actually a full year further, the outperformance of the Nasdaq. But we can, what really was an outperformance, because look at the relative strength to the S&P. The S&P started to outperform right about the time that we showed this over this IPO boom developing. From then on, the Nasdaq comp went up, but it went up at a diminishing rate to the S&P. Rotation, that's what was going on here. So now we see that we are pulled back to this very important long-term trend line that goes all the way back to 2003, 2007, and it's touching here. Could it go down more? Absolutely. This is what happened. Throw over here, decline went on for a while, did a lot of price damage. We can't argue that that won't happen. We just don't know. We're going to watch it very closely. Here is U.S. Treasury 10-year yields. This is one of my favorite studies, and let's blow it up. Here is distribution. This goes back, this chart was from January of 2021. Distribution structure in yields. So the yield was as high as 324 right here, 3.24%, came down, completed the distribution structure with an LPSY across this area, 33 columns across, and it's a 2 basis point scale. Now we know that falling yields produces higher bond prices. So how far down does this distribution count take us? Wow, 1.26% down to 0.62% with a 0.94 in the middle. Well, bingo, it went right to that level and built some kind of a cause. In this case, we argued a cause for higher yields in the future. Very cyclical. Look at this distribution here, redistribution. This confirmed the distribution count. That's called a stepping stone redistribution count. This equals this. Both of these counts confirm each other. A cause forms, big climactic low, automatic rally, range-bound condition, builds a cause. And at the time, honestly, I was a little bit, I won't say that I was embarrassed to show this, but I will say I was tentative about it because the yields were going up so much. But I said it could take a long time for this to happen, but yields are likely to go higher. And that was a very important thing to cover in our power charting episodes together, because wow, what happened next? So here is where we went. Segment 1, the purple segment, went up to the level of the redistribution. Let's zoom back in. That count yield 154 to 192 off of this purple area. The green zone, the green segment counts up as high as 252. And then the biggest count that we had at the time counts up as high as 3%. That's a huge, huge increase in yields for the bond market. And so that represents real trouble for bond prices. Here's a more traditional count, one box reversal, swing trading structure, 1/10 of a point yield count. This gave us a count up to 3.20, pretty close to what we just looked at in the other chart. Now, what happened since? Well, here it is. And the count actually grew bigger. So this is the count that we basically just looked at with a jump up and a pull back. This count took us up to 294, as high as 294. This count, which is a jump out and a pull back, and that is the full count of this structure, goes all the way up to 4.5%, 384 to 4.5. Huge, huge count off of a low that was what, 0.52. And so that is a tremendous advance. Reaccumulation count here in purple, that count goes up to a confirming 4.3 to 482. They do confirm each other, and look where the top comes in so far, at least 4.24. Then a very sharp reaction. This sharp reaction confirms, in fact, that these are good counts. This is what happened on the vertical chart. Now an important pullback. This is through December 7th of this year, so it's current, relatively current. And this is starting to show that important reaction is taking place in bonds, and I have a chart to show you on that in a second. This is yield curve. We've been on yield curve really since 2019 talking about it. This is the 10-year to 2-year yield curve, which touched zero, flat curve, but rates were falling throughout this period. And we said it at the time, no big deal. And that as long as rates were falling, this was a good environment. Well, what happened since? Well, here are the 10s to 2s. They have continued to be falling. This declining line says the yield curve is flattening, constitutes tight money. The financial industry tends to get into trouble in a tight money, illiquid environment. We are seeing some of that now. And the weak players tend to fall by the wayside first. And I say FTX is an example of that, even though there appears to be some other problems there. But that's what happens, is that these are the kinds of events that occur when you get into a tight money environment. Yields are rising dramatically. This is in fact this is the 10s to 2s. Here is the 10 to 3-month T-bill, and this I'm trying to erase. And so this is falling really dramatically straight down. This is a product of a Fed that is quite restrictive, very low. This yellow area represents negative yield curve, tight money, yield curve is negative. Expect continued trouble, probably a recession in 2023. We'll talk more about that as we get into the new year. But this chart on the right is all important because note, this is bond prices. This is 20+ year US Treasury bonds, ETF, TLT is a symbol. Here is the distribution structure here, very large distribution. This is the high price, 152 is what this is trading at. Builds a distribution count. This count goes down to 101 to 91 from 152. Imagine that kind of volatility in the bond market. That is severe. Here is a redistribution count, and it confirms the distribution count goes to 93. The low so far has been 92. What was the response to hitting the low count objective, which is very close to these two counts? It immediately started to reverse upwards after, look at this climactic decline. It's gone up as high as 109 right now, and maybe it goes further, maybe it becomes more range bound. But I contend, as I said before, when you hit an objective, you've done your point and figure work correctly, you're going to get a sharp reversal right away. We have in fact gotten that. We're seeing a big decline in energy prices right now. Could very well mean that the bond market is saying that the Fed is going to be moderating their policy stance going forward as we go into the new year. We'll watch and see what they do. I don't pretend to be a super duper Fed watcher, but you know, I'm an amateur Fed watcher, and it's a lot of fun. Here's the S&P 500. I'm going to go a little quicker here. This is a very interesting chart because this is log scale, 3% scaling on the rise here and decline. And so this is logarithmic, and note the logarithmic run up of prices in the S&P 500 in 2021. We had a count that fulfilled right up here at around 45.83, and it became range bound at that point. And so we had said at the time that this was likely the exhaustion of this move because we had used up the fuel in this accumulation structure. And so we had an acceleration of prices into a climactic blow off. And we said at the time that it was range bound. This chart was made in August of 21. So we're seeing the end of the advance in upward prices and talking about them in August of 21. Here is another chart. I should clean this up a little bit. And this chart goes back to 2020 to 2018. This count takes us up 475 to 495. This is the SPY, basis the SPY. And so it trades just the way the S&P does, 1/10 scale approximately. Went to 475, exact hit of the lower objective. And so we can see here a cause building of some type, either a reaccumulation for a move up or decline. We know at this time now that this is in fact a distributional structure. And again, these point figure charts just did a super job for us at the time. This was January 31st of 21. Here is a distribution structure of the Dow Jones Industrials, up thrusting action at the end. This is December. Note that right at the end of the year, on the end of the year, end of the quarter, it makes an up thrust and then fails dramatically, saying that everything that preceded it was in fact distribution. And that's what up thrusts in fact do. And this is a sign of weakness down here. Attempt to rally. This is likely an LPSY. This is February 1 of 2022. Here is a count of this area. The first count goes down to 31.7 to 31.4, but this very, very large count goes all the way down below 20,000, 19.8 to 18.1. So that's quite a substantial decline. Whether it can get there or not, don't know, but we have broken down out of this zone and are starting to work lower. I would suspect that we'll get redistributions along the way that would signal that we're going to hit this 19,000 area if in fact that is going to happen. Okay, and here's our distribution structure, which confirms and looks very similar to the up thrusting action. Up thrusts occur right at the end of distributions and then failure thereafter. Exactly what happened here in the Dow Industrials. Very quick look at Bitcoin. We only have about 4 minutes left. Just want to make the case. This is January of 2022. We did an analysis of this distribution structure, which came in at a count line of around 66,000 up to 68.5. We counted it down, big haircut down to 45,000, 46,000 to 43.5. This is a redistribution, and then once that was complete, it started to fall again. We know it's been substantially lower than that. I'm not a Bitcoin person, but you know, when you see a structure like that, you got to count it. So here is what happened in the triple Qs. Here is an upward move. Counts are working beautifully. This is swing trading, one box reversal method. Count fulfills, count fulfills. This count confirms the purple count, the green one, and they are on a throw over of the upward trending channel, and this produces the distributional structure that ultimately shows weakness down to the bottom of the channel, which we see here, and a sign of weakness, and preliminary supply roughly equals last point of supply across this area. Here's another chart of the NDX. This is the 30-minute actually point figure 3-box reversal midpoint of 2021. This actually was in June of 21 that this was this count was taken. But look where the count went as high as 16,420, and it went, and the count line is 13,460. The count goes up to 16,764, slightly exceeding the 16,420, which is this area here on the right on the vertical, so you can see that, and that is the beginning of the distribution. And this was a beautiful count, worked extremely well, and it worked as a trading count also. Another chart of the triple Qs. I want to show you a point figure. This is a distribution of the Nasdaq 100 and a count that goes down in 2 stops, 14,000 and 12.8 to 12.1, and we got a little bit below that level. This just shows here this count area here, which look how beautifully that picked up that final top, and then the distribution. Fantastic. Now, this is a triple Q count that shows more of what happened thereafter. It just keeps rode along the lower channel and then broke down and kept going. So here's a count structure, beautiful count down to this area where it stopped temporarily, and it did go below that level. This is as of March of 22. Markdown is quite severe. It just keeps going, and it has further to go. Okay, so this count, I want to show you the bullish percent in the minute we have left. The bullish percent is in a downward trend throughout the year, while the Nasdaq is rising. Non-confirmation of the advance, reduced participation by the stocks, finally a rather large distributional structure where lower highs on a steeper scale between these 2 points here, and this is when the trouble really starts. So it really pays to look at the internals. And these are some counts that we have of that area, and we are going to look at one more chart and be done, and that is just the this is the S&P 2 redistribution counts down as low as 33.50. These confirm each other, and here's what happened. It went right down to that level, fulfilled that count, and now we're starting to advance back upward. Whether this is sustainable or not is a discussion for next year. But on that, I want to thank you so much for participating in power charting over the last year. I really appreciate our community. I appreciate hearing from you, and let me know, give me a thumbs up if you really like what we're doing at power charting, and we will see you in the new year. Have a great holiday. Take care, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.